Oh, I'm ready. When you're ready. Good morning, everybody. This is the live market open for Thursday, March 24th. Good morning, everybody. I'm Yohay of Forex Sequential Market Movers podcast, doing the show as usual for FX Rate. See quite a few of you in the room. We'll talk about recent developments in markets, what's going on, various charts and levels the next 24 hours, which could include thin liquidity and perhaps lots of action, and of course your questions. So if you cannot see the chat box, please go to the address here, tlk.io/fxfree-live-video. Okay, so what we have this morning is that the general mood in markets, what's going on. It's easy to define it. The US dollar remains strong. It's gaining across the board, more against some currencies, less against others, but in general, it is stronger. Oil is falling sharply. There's a good reason for that. We'll talk about that soon. And the Brussels bombings that happened, actually, it was on Tuesday. They're getting a bit less attention in markets. They still have an impact, of course, especially on the pound, but it's sort of becoming more an impact on political news and less on markets. Okay, so well, maybe we'll begin with oil because I already mentioned that. Inventories rise to 9.4 million, much more than expected. Also a rise in distillates, and it seems in general that oil producers in the United States, the shale oil industry, is ramping up production. Why? Because oil prices were higher. They easily bring up to speed some of these rigs, and production is rising. And there's just too much oil in the market once again. So we had a period of low prices, less production. Now the pendulum swings to the other direction. Well, I mean, when the pendulum swung to the other direction, we had oil prices rising up to above $40, and then this triggered less production, higher oil prices. Now we have once again a bit more production and lower oil prices. So let's begin with that. As you can see, we had oil prices, WTI crude oil. I'm looking at that now. Brent prices are quite similar. They rose above the round 40 level, very significant psychological level, and floated around, got very close to 42. Yesterday, this rise in oil inventories came on already fertile ground. Oil prices were already falling, and they tumbled down, lost the round number. Probably some stops were triggered there as well. Currently, we're 39.25. The low for today has been 39.15. We could see, of course, perhaps further falls below the round 39 level, and then 38. 39 was, well, capped the pair just back here in, last week. No, 2 weeks ago. Okay, so we have oil falling from the highs. This, of course, has a significant impact on the Canadian dollar. We talked about the Canadian budget published back on Tuesday night, which had no meaningful surprises. The Bank of Canada is not expected to act according to the Canadian budget, but that kept dollar CAD in range. But then when oil prices fell, boom, we shot higher and above the 131.70 level that capped the pair. Currently 132.63. The next level is 133. So quite a significant turnaround from the lows. Remember, we traded also under 130 not that long ago during this month of March. So now we're back to higher levels. Is this a big turnaround? Is this just a necessary correction after a huge fall from mid-January from 147? I don't know at the moment. The fact is, there's just too much oil going around the world. US shale production, even if it falls, it can be picked up quite easily, quite fast. And yeah, so we have an OPEC meeting on April 17th. I don't see them agreeing on anything. It's an OPEC, non-OPEC meeting. Not everybody will come, and the big factor there is Iran, which just came online, and yeah, so they're not willing to cut anyway. Of course, until that meeting, if oil prices fall too much, of course, we could have these members, Russia and OPEC members, deciding to cut production. But at current prices, they're still relatively high, relatively not in the panic mode. Okay, so I began today with oil because we had in Canadian dollar because we had a significant move. Before we continue, I already see a question. What do you think what the impact will be on odd CAD? Do you mean Australian dollar versus the Canadian dollar, or just in general about commodity currencies and separately the AUD and the CAD? Anyway, I'll continue the usual run of currencies, including, of course, the Australian dollar. Let's begin from the top. You know that, well, it's easy that most popular currency pair in the world is euro-dollar. Also there we're seeing the dollar domination. Here it's very gradual. We've seen that this kind of pattern several times in the past, gradual grind lower. Does this mean we'll have a big bounce higher? I'm not sure. The Fed has become more hawkish. That's the reason for the fall in oil prices. I'm confused. The Fed is becoming more hawkish, very different from that Fed statement last week. Okay, we heard many people talk about a potential hike in April. I don't see that coming at all, but just the fact that it's being repeated by Lacker, Lockhart, Williams, and even Evans, the Dove didn't rule that out, and Bullard. So we're having this general dollar strength, and the euro is sliding against the US dollar. Okay, so now we fell under previous levels at 112.15, 111.90 was in general a very choppy and gradual fall. Currently, as we speak, it's flirting with 111.50. I see strong support only at 110.70, which was the post-Draghi high, and more or less the pre-Fed low. Okay, we can see the recent movements on euro-dollar. This, where I'm standing now, that's the Draghi action. First huge package delivered, fell to 108.20, a triple bottom, then a rise all the way to 112.15, gradually grinding lower towards the Fed. Fed went dovish, boom, it went up, and now it's grinding back down. 111.50 is the low for the day. 110.70 is support. Yeah, I see here, the Australian dollar is also indirectly impacted by oil prices, because it's not only oil that is sliding, it's also other commodities. And it also impacts the general mood in markets. Okay, so we have the general mood in markets is negative because there's too much oil. That means there's not enough, according what's perceived, not only too much supply, but perhaps not enough demand. Not enough demand from China means more difficult times for Australia. And in general, there's a risk-off mood. We'll soon look at the yen. We're seeing the yen slide a bit less because it's a safe haven currency, and we're seeing risk currencies such as the Aussie fall. I see another question about 31 million barrels in floating storage are coming to shore. Yeah, regarding those million barrels, I mean 30 million barrels. Remember that the world consumption is about 90 million barrels per day. So if we have 30 million floating, it's a third of daily consumption. So in general, if we have too much oil floating around, it's negative for oil prices. But the bigger problem is the general, not the amount of oil floating in boats, but just basically supply versus demand. Too much oil is pumped out of the ground and not enough being consumed. Oversupply pushes prices lower. We had since February some kind of back down in supply, less production, at least from the United States. So prices became a bit more balanced. Prices began rising, and now it's falling back down. Okay, let's continue with our daily round of charts. Here we are with euro dollar, pound dollar. Pound dollar continues suffering the growing chances of a Brexit. We're now getting very close to support at 140.50, which was the low back here in mid-March, and also the top here in at the end of February. Okay, so this is a strong line, not the round number of 140, but actually 140.15. Remember the Brussels bombings? We had a tragic event. It was Tuesday morning. It seems like long ago, but 2 bombs at the airport, 1 at a metro station close to the European Commission. Over 30 people killed. The terrorists are now linked with the attacks in Paris, the Islamic State. There is an ongoing investigation, of course. People of Belgium are mourning, and many others, of course, all over the world. In terms of market impact, had, of course, negative impact on the market mood. Of course, it's a tragic event, means more security, perhaps less trade, less open borders. In terms of the political impact on UK voters, it could shift them just a bit towards voting against staying in the European Union. And that's for 2 reasons. For one reason is that they see the incompetence of the European authorities. That means, in this case, the lack of cooperation between France and Belgium, or in general, those Europeans that don't know how to deal with terror in comparison to the UK. Again, it's a perceived, it's not my opinion. And another thing is that the fear of immigration. Now, these terrorists did not come from recent immigration waves. I think they were all born in Europe. But the perceived idea that the UK would be forced to accept more migrants because of Europe, and therefore introducing more terror through the back door. Again, what campaigners might be hinting to, or in the exit campaign, this also weighs on the British pound. We've seen quite a spectacular fall. Let's look at the charts again. From all the way from 145, okay, but let's go back to Tuesday morning. Okay, we were around 143, 142. Quite a spectacular fall, extending this morning. Yeah, currently stabilizing a bit, but no, not that much. We fell under support at 141.25, and attempts to move back above this line failed. Next line of support, 140.50. I think that if 140.50 breaks, it'll be relatively easy to break under 140. Resistance, perhaps 142. It's a bit choppy to the upside. Okay, dollar yen also, we've seen the US dollar strengthening, including against the yen. But so this morning, perhaps the move is relatively strong, almost 50 pips, but we did see the yen sliding a bit. I mean, it's relatively more stable, perhaps not this morning, but anyway, 113 works very nicely as resistance, 112.20 as support. The dollar yen is surprisingly good technical pair at the moment, okay? Further resistance is 114 and further support at 111, which is sort of a line in the sand. So it seems for the for the Bank of Japan, if oil falls, all commodities down as well. There's a good correlation, isn't one-to-one, but usually there's this market mood, risk on, risk off. If it's a good mood in markets, oil is up, other commodities are up, stocks are up, risk currencies such as commodity currencies are up, and the yen is down. And the other direction is oil is down, as we see now, other commodities are down, and all risk currencies are down. It's not always like that, but we're seeing it right now. We're seeing here the Canadian dollar. We already talked about it. 132.46 at the moment, 133 resistance, 134.60 further resistance, 131.70 support. Okay. And together with the slide of the Canadian dollar, the C dollar, also the A dollar is sliding. Okay. 75 at the moment. The pair is making an attempt to bounce back up, but as we speak, but the mood up to now was sort of gloomy, below 74.77, further support 74.40, resistance, well, this line of 75 doesn't seem so strong anymore. I would say if we update the lines, Australian dollar is a bit disappointing in technical terms, 75.40 is resistance, high resistance 76.80. Kiwi dollar, same thing, fell under support at 67. Still battling around this number, we haven't gone too far. Further support 66.20 and 65.50, resistance at 68.20. Yeah, comment here from Senator. That's the populist standpoint, which we have to oppose. The terrorism comes from. Yeah, I agree. Anyway, if it's a close race in Britain between, according to opinion polls, between the Leave and Remain campaigns, everything makes a difference. Okay, so yeah, and of course markets react first, even if the speculations have no roots, it still makes a difference. Okay. I was talking about the Kiwi dollar. Let's continue. Dollar Swiss, stronger dollar. This pair is moving a bit higher. 97.65 at the moment, above 97.50. Also here lots of choppiness, but I would still look at this 97.50 line. Further resistance 98 to 98.50, support at 96.40. Euro Swiss sliding under 109. Yesterday it went even lower. Very limited ranges here. Very close trading partnership between Switzerland and the Eurozone, and also the Swiss National Bank intervenes. I would say 108.75 is some kind of support at the moment. Quite a mess here, I would say. Anyway, yeah, so maybe 109, 108.75 to 109.40 is the level. Euro pound, we've seen this weakness of the pound beating the weakness of the euro. So we went above the previous level of 79.30. That means euro pound is at the highest levels in quite some time. The highest since the end of 2014. Okay, the highest in 15 months for a euro pound. That's perhaps the most significant breakout, but we haven't gone far. It looks like a false break. Looks like we still have a struggle. Also this morning, the 79.30 line is still fought upon. Okay, so we're just a few pips under this level. Anyway, the next line, of course, is 80, which is a very round level, very psychological level. What is the relation, a question here, between good and bad mood and gold? Well, we've seen that gold prices have reacted positively to a better mood in markets. That means we've seen that when central banks are not keen on raising rates, that means the Fed, or when central banks like the ECB and the Bank of Japan are printing more money or introducing negative rates, that means there's more money afloat, more demand, and that helps gold prices, okay? But on the other hand, that's what we've seen throughout the crisis, more printing, more gold, sort of this hedge against inflation. What we are seeing now is a bit more complicated. What we're seeing is that when we have low inflation, even deflation, the normal saying that there's no yield on gold, which is true, in times when there's deflation, when money, when keeping your money at the bank isn't worth anything, and just holding gold perhaps is better. So gold prices enjoy the gloomy mood. So I would say it's a bit more complicated, a bit more mixed. So I don't have really a straight answer. We've seen a lot of speculation. We've seen a fall in gold prices this week. So it's I don't really have I mean, it's not always a one-to-one correlation that I can fully explain. Okay, well, we have here a nice comment from Sinatra, maybe better explanation. Gold is still having a reputation as a safe haven in crisis times. Yeah, we've also seen recently gold can rally with markets. My 30-minute look into gold, bullish divergence. Thanks, Sinatra. Let's share it with everybody. This is a chart by Sinatra that you can examine. Recent slide in gold prices charted here. What's the scope here? 30 minutes. Okay. So thank you. Sometimes gold is correlated. I mean, these correlations change all the time, so I'm not really sure what to tell you. The past week we've seen gold moving up with the dovish Fed. That means enjoying the good mood in markets, like in good crisis times, more free money, higher gold, and then this week sliding when when the dollar strengthened, the Fed became a bit more hawkish. But it's not always like this. So yeah. So correlation is flips around quite a bit. Okay, let's continue. Euro yen, very stable in range 126. 125 still works as support up to 127. Okay. Pound yen found support here at 158.50, which was resistance just here back in late February. Okay, so works very nice technically. Right here, 160 still works as resistance. So quite nice range trading. If we fall further under 158.50, the next line is 156.15, resistance at 162.20. I mean, first resistance 160, next resistance 162.20. Okay. Just another look at oil prices, 39.36 at the moment, getting close to 36. To 39. As you see, a big turnaround, this sort of U-turn in oil prices, which we've already talked about. Let's take another look at euro dollar. Well, it dipped a bit lower since we last looked at it when 11.48 is low, but a very, very gradual fall. Looks like the Bank of Japan is helping the yen. I don't know if they have a target in mind. If they do have a target and they say it out loud, markets will try to challenge them on these targets. We are seeing now a bit of a change in the mood. I think it's only correction. That means a bit of a risk on. That's why the yen is sliding a bit, getting closer to, well, it touched earlier resistance at 113, up from lower levels, and we're seeing at the same time currencies like the Australian dollar rising. So it's a bit of a risk on. A bit of very limited turnaround. I don't think the Bank of Japan is intervening at the moment. What I did see them, I think they didn't like the fact that that dollar yen fell under 111, and they intervened there to try to. This looks like an intervention right here. Okay, this kind of spike when the pair fell under 111 to around to under 110.70. Okay, then we've seen this spike. It could be intervention, and we've seen 111 being tackled for the third time. The third time was a breach, and then we've seen it. So this could be a line that they intervene. But in the past, not so distant past, in January they intervened when dollar yen dipped under 116. That's when they began at least their verbal intervention, and then they set negative rates, sent dollar yen all the way up to 121.50, but then markets began changing direction. The mood became sour, and the Bank of Japan was overrun by markets. Eventually, we had a crash under 116. We fell to much lower levels. We've never recaptured 116 since then. So, yeah, it's the end of FX. It's the end of FX, FY. In Japan, and traditionally we see repatriation flows that strengthen the yen into month end. Fiscal year. Okay. Yeah, thanks for that comment. Indeed, the fiscal year in Japan ends very soon, at the end of the first quarter for the rest of us, the end of March. So yeah, that could be repatriation funds. Yeah, fiscal year. So yeah, thanks for that comment. I think we'll see bigger flows towards the very last moment. Okay, that means next week. Next week we have 4 trading days, at least in most countries, 4 trading days to end the month of March. Monday, which is a holiday in some places, and then Tuesday, Wednesday, and Thursday, and then Friday is already April Fool's Day, April 1st. So I think we'll then see the bigger movements. Not yet, but you never know. Perhaps there are adjustments already now. Okay. So we've covered all the currency pairs we usually talk about. Let's mention other events we had yesterday. More or less okay figures. We had US new home sales coming out very slightly above expectations at 512,000. Expectations were 510, so it's in line. We talked about oil inventories, which had a big impact, the big rise in oil inventories, which weighed on oil prices. Belgian business confidence beat with minus 4.2 is still negative. The survey was taken before the bombings. The New Zealand trade balance was really good with a surplus of 339 million. So that was, but that didn't help the Kiwi too much because the mood in markets is not so good. Perhaps it stopped the bleeding. Comment here, if US stocks have topped, that could compound the yen strength. Yeah, there is a correlation there. Pound yen may be in for God save the Queen moment. Yeah, perhaps. I think the pound has more room to the downside, and that means against the yen, the euro, and the US dollar. So God saves the Queen, but perhaps the pound can fall more before it can bounce. I think a real turnaround in the pound will come only after the referendum is out and people vote to stay in. Of course, that's an unknown. They can still vote to leave. The pound certainly doesn't like it. Okay. Yeah, so these are some events we had yesterday. I don't think that oil had a huge market effect. All the others, not so much. Today we have a busy day. We have German import prices and confidence actually already out. So let's refresh the FX read calendar here on Forex Crunch. So import prices, well, they fell minus 0.6 month over month. We know that prices of imports are falling. It's not new, but year over year, the fall is huge, minus 5.7, much more than in January. So these figures for February point to further downwards inflation pressure. I mean, fear of deflation. It's not the most important figure, import prices, but it just reminds us that inflation is a big problem and the ECB is there to do whatever it takes. Consumer confidence missed by just a bit, 9.4 against 9.5. So not really good news from Germany this morning, but also not that terrible. Business confidence in France for the month of March, well, it did rise a bit, but below expectations. Also not that important. We have questions here. Do you see yesterday as a key reversal day in the S&P? Always hard. No, I don't. Well, first of all, I don't follow the S&P that closely. Let's take a look here. We have seen some kind of a reversal. I don't see at the moment. It's too early to say. We've seen, well, a few days of gains from the lows here in mid-February when we had the excellent retail sales report in the US, later revised to the downside. So we had gradual rises, now a fall. Too early to say. It's 2 days of falls, Brussels bombings, oil prices. Let's see how things turn out. My bias is yes, we're going to see more. There's more room to the downside, also on S&P, also on general risk assets, but we'll have to wait and see. Okay, so it's not that big a fall. If we do look at a bit of technicals, we can say we're seeing lower highs. Okay, but yeah, it's a bit too early. Okay, more comments here. If the UK votes to exit, take 2 years from the date of the signature, the EU nations to leave, but once signed, can't retract. I'm a huge buyer of pound when it's lower because UK will not Brexit. Yeah, that's taking a risk, of course. At the moment, the uncertainty is weakening the pound, and once we have certainty that the UK is staying in it, then there are no changes, much more certainty, the pound will probably bounce strongly. But I do think the same goes for the other side. We've seen a big fall in the pound, and if we do have a Brexit, it'll fall a lot more, in my opinion. So yeah, so it's a bit of a binary event at the moment, with uncertainty weighing, but nothing is fully priced in at the moment because polls are very, very close. But so many things can change between now and 3 months forward. It's on June 23rd. If we break the strong 140.55 level in cable, do you think we can test lows at 138.40? Yeah, why not? I think the trend is to the downside. There are a few hurdles until the very low of 7-year lows, actually, of 138.40. Further lines to the downside are 139.50. But yeah, the big support line is 138.40. Let's see how things pan out. So we've talked about the German figures, not so good. We have a big event today from the UK, which could have an impact or make or break moment. But as I said a few times in the show, UK figures have a big impact on the pound in the 30 minutes, 20 minutes sometimes before the release, and half hour afterwards, and then it could fade out. So retail sales is a very important release. The monthly figures tend to have more impact than the yearly figures. Headline number has the biggest impact usually. After a huge jump of 2.3% last time, now we're expecting a fall, so expectations are low, minus 0.7. Okay, excluding fuel, a bigger drop of 1% is expected. Okay, monthly, year-over-year figures, we're also expecting more modest gains, so it's 3.8 instead of 5.2 on the headline, and 3.4 instead of 5% on the excluding fuel figure. We also have the British Bankers Association mortgage approvals report, expected to remain more or less the same level. I'm sure I can even say that the retail sales report will have more impact than mortgage approvals. First of all, watch for the retail sales headline month-over-month number. Okay, so that's a big event for this morning. Later in the morning, we have, while retail sales from Italy doesn't have a big impact, we have the targeted LTRO. Remember, it's part of the ECB's policy to give cheap loans to banks, and coming soon, even they're gonna pay banks just for those banks to lend to the real economy. Last time it was a modest 18 billion euros. Perhaps this time it'll be a bit higher. More lending, more economic activity, more growth. Okay. And before we move to US events, well, we'll answer some questions, and I see, one more event, the CBI, the Confederation of the British Industry. They're, of course, anti-Brexit. They released their survey of distributive trades. It's expected to rise from 10 to 15 points. Not as important at all as the retail sales. Okay, I have some comments here. Remember when the pound had to leave the EMS? I think you're talking about the ERM, and Soros became an overnight billionaire. If Brexit happens, downside for the pound could be similar. Yeah, I'm sure there's a ton of speculation, but also speculation on the other side. Anyway, it's going to be a huge event on June 23rd. But the pound will certainly move also on any opinion poll and any comment. We had the resignation of Ian Duncan Smith over the weekend. It made a lot of waves as well, so it's a big mess. Question here: how do you see dollar CAD and euro CAD in the short term? Okay, I'll just look at that soon. And we have here, Sinatra answering GM. Here's the pound dollar chart on Lara, and Dale Pinkert's show. So let me share that also with the others here. Yeah, quite an interesting downside. Yeah, I'm also glad that you guys are helping each other. That's why we're here for. Yeah. So we have a question about dollar CAD and euro CAD. If dollar CAD reverses into the uptrend, many great levels on the journey up. Yeah, that's right, because we had quite a big journey to the downside. Let's start with dollar CAD. Okay. So thanks everybody for the charts. Now, the levels to the upside, the most significant one and the most immediate one I see, is 134.60. Why? It was a double top here in the September and December, and also worked as resistance recently after the fall down. Okay, so the big level to watch, 133 is the immediate level. We might have 134 perhaps, but 134.60 is a much bigger level. On the upside, we have 136.50, also very significant because it worked here as support, and once the support was breached, we had a big downfall. 140, not only around level, but we can see here sort of a head and shoulders pattern on dollar CAD. First shoulder, the left one in December, and then in February. So very, very nice levels. Of course, the highs were just under 147. Okay, to the downside, in the short term, your questions were, well, in the short term, I see, well, we have falling oil prices, but the Canadian economy is doing okay. I think there's a bit more room to the upside on this negative mood, but perhaps not too far. Okay, let's watch out for 133 and 134.60, and to the downside 131.70. Now there was a question about Euro CAD. I'm sure we have this chart here. Yeah, Euro CAD currently 147.90. Relatively in recent days, sort of range trading. These are old levels they put up in the past. Anyway, this line is still relevant. Yeah, 145 to the downside and 150 to the upside. I can't say there is a clear trend at the moment. Okay, let's add some more immediate lines on the short term, answering your question. So it would be, yeah, lots of round numbers here, 146. And maybe to the upside, it's a bit more messy. 148.80 or so, okay. I don't have a clear bias on that. Both currencies advanced a lot against the US dollar when the Fed was dovish. Now they're both retreating more, or Euro CAD is on the rise at the moment, but I'm not sure we'll have a big move here. Another question here, what about dollar Swiss? Dollar Swiss, I just mention it. I don't dive into it because the Swiss National Bank tends to intervene in markets. We're basically seeing here a reflection of euro dollar, and on a fundamental level, we're seeing the change in the mood regarding the dollar, regarding what we hear from the Fed. So this is the big fall from we've seen from on the dovish Fed. 96.40 worked very, very nicely as a support, a bit under the previous line. Anyway, 97.50 works as some support, 98 resistance. Basically, it's a reflection of euro dollar, a mirror image, if you wish. See? Euro dollar jumped and then gradually fell. Dollar Swiss fell and is gradually rising. The round level of parity is, of course, of importance. More comments here. Missed LAR yesterday. I know Cirque has a huge down target for cable. The leg up 146. Was that the chart setup? Okay. Unfortunately, I also missed LAR yesterday, so I don't know what you're talking about. But anyway, sure you can help each other. Let's talk about more events for today and then reach the wrap up. Questions today? That's really great. We have another speech by James Bullard at 12:15 GMT. He's known bull or hawk, so if he says something upbeat, it shouldn't have a big impact. bigger impact was heard from Evans, which is a dove, and he was speaking about raising rates. So that makes difference when we have a surprise. The big release for today in the United States is durable goods orders. Why? Because core durable goods orders reflects long-term investment, and that's important for the Fed. So we have quite a few figures here, all kinds of slice and dice figures, but so it's important to look at everything. Durable goods orders are expected to fall after a huge rise last time, minus 2.9 after plus 4.7. More important thing is that excluding transportation, here the moves are more moderate. So we had a rise of 1.7. Now we're expecting a slide of 0.2. And we have another measure here. I can't see that. No, okay. So you can also see in various publications other kinds of measures. Initial jobless claims, like every week, they were quite good in recent weeks. That means lower. 265 was seen last time, this time 268, more of the same. Also, the market services PMI is worth watching because last time it dropped under the 50 mark. It means reflecting contraction in the services sector. This time it's expected to rise to 51.3. This is a preliminary figure for the month of March, okay? Last time it was quite scary. Remember that ISM has more impact than market regarding purchasing managers, indexes, PMIs in the United States, but nevertheless worth watching. Natural gas shouldn't have an impact. Something else to watch is the Baker Hughes oil rig count. We know there is limited correlation, light correlation between the number of rigs and actual production. So it's not as important as oil inventories. Nevertheless, worth watching on thin liquidity. It's usually published on Friday afternoon, this time on Thursday, because, well, some people are on holiday. We will be doing the show as usual tomorrow morning. US markets are still open and we have an important release tomorrow, US GDP. Okay, let's see if we didn't miss anything. Yeah, well, Japanese inflation figures late at night. Let's see what's going on over there. Okay. Anyway, glad you guys are helping each other. So, okay, we talked about everything, what moved markets, covered a lot of charts, questions, and what's happening today. Let's get to the wrap up for today. This is the wrap up of the live market open for Thursday, March 24th. We're seeing the US dollar continue to dominate markets, still looking strong, still on top of those hawkish comments that contrast the dovish Fed. Another big theme in market is that oil prices have turned south following a big rise in crude oil inventories, distillates, everything. So higher prices mean more production. More production means falling prices at the moment. Has an impact on the market mood, not only on the Canadian dollar. The Brussels bombings have less attention, carry less weight in markets. Of course, it's a big political story. They do continue weighing on the pound on the Brexit fears. Yesterday's figures, one that stood out is oil inventories. We talked about that. Other figures were more or less okay, with a nice beat in New Zealand trade balance that didn't have an impact on the worsening market mood. Let's look at the main currencies. So euro dollar now a bit bouncing from the lows, but continuing its gradual annoying slide to the downside. Very limited moves. 112.15, I still see it as some kind of resistance, followed by 112.50. Significant support at 110.70. Okay, pound dollar struggling. Support awaits at 140.50. It's been a bottom recently and beforehand a top. Okay, very significant level. The pound is under a lot of pressure. 141.25 and 141.75 are lines of resistance. If we lose 140.50, we could, I think, easily break under 140, and the road south is open. Dollar yen, very nice range trading between 112.20 to which was support in the past, to 113. Not breaking above 113 at the moment. Dollar CAD suffering the falling oil prices, mostly yesterday, but continuing today as well. 133 is the next line of resistance, followed by 134.60, support at 131.75, 131.70, and 130, the wrong number. Aussie dollar also feeling the pressure of falling oil prices, worse market mood, sliding under 75 as we speak. 74.40 is some kind of support. Aussie dollar is becoming more choppy, and also the Kiwi dollar is down under 67. Support awaits at 66.20. Okay, events for today. It's quite a busy day. We soon have UK retail sales. Always moves the pound, but we could have big moments, but short-lived. Okay, a fall is expected this time. The TLTRO results for the euro, meaning how much the ECB manages to lend out to banks for them to lend to the real economy. Bullard talks again. The big event for the day is US durable goods orders. The Fed has a focus on investment. If it rises, it could give another shot in the arm, another boost to the US dollar. If it falls, we could perhaps see a reversal of the trend in the recovering US dollar. Jobless claims worth watching. Also, the market flash services PMI after the very bad figure last time. And last, we have Japanese inflation figures. Okay, so it's quite a busy day. Many traders, many markets are going to be on holiday tomorrow. It's Good Friday. It's Easter. We're going to have the show as usual, including the usual preview for next week. The big event for tomorrow is the US final GDP coming out on thin liquidity. So I think we could still have a lot of action tomorrow, and I'll be glad if you're available, if you can show up as well. So thank you very much, everybody, for coming to the show this morning. Markets are busy and about to get busier today. And wish everybody a safe and successful trading day. And that's it. So see you tomorrow. Thank you and bye-bye.